Hey guys, Luca here. Thanks for jumping into another video. Today we're diving into Bitcoin, and specifically the three potential scenarios that could take place moving forward of a potential cycle top. As always, if you're enjoying the content, don't forget to give this video a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Now let's get into it. So moving to the charts, over the last couple of days, Bitcoin has been going up. And what we see here is that we're starting to form this reversal pattern. And a lot of people seem to be really excited that Bitcoin is performing well once again. And I've made a video back in March around these levels where I highlighted the potential of a cycle top moving forward. And one of the potential scenarios that I highlighted was that we could see this reversal playing out and from here on out start a complacency phase. So this is one of the scenarios I'm currently tracking, whether we could see it playing out. This is the bearish scenario that could take place from here on out. That implies that the cycle top is in at these levels and that now we're forming a complacency phase that precedes the actual bear market. Personally, I think this scenario has a really low likelihood of taking place, as there are a couple of bullish confluences on the high time frames that have developed that would invalidate this idea. However, I think that if we start forming some clear bearish confluences such as the price dropping here and euphoria taking over once again, and the Bitcoin dominance, which I think is a really important variable into all of this, when it starts going down and shows a lot of relative weakness and altcoins suddenly start to outperform, those would be the sort of warning signs that would increase the chances of this idea to play out. So this would essentially be the bearish scenario that I'm currently tracking. If we scale out a bit on an Elliott wave perspective, what people see that highlight this idea to play out is that so far we've had essentially a completed 1 to 5 impulse up, where we had this first impulsive wave, then this corrective wave 2, impulsive wave 3, corrective wave 4, and this was the last impulsive wave 5. And what they think now is that we had our first corrective wave A, and now we're in this impulsive wave B that precedes the next leg down, wave C. So this is how this thesis could play out, and this from a market sentiment point of view would coincide with complacency phase that precedes the actual bear market and capitulation. However, I think that as bullish as we may be on the high time frames and as many bullish confluences have developed, I think this sort of scenario is something that we want to keep in the back of our minds when we get overly bullish on the low time frames, when we start being overly excited once again that Bitcoin is performing well. This is something that we should pay attention to, and as unlikely it is to play out, I think it's still a possibility that we could see this developing if we start forming some clear bearish confluences on the low time frames. And as I covered in one of my latest videos regarding the price action over the last couple of days, something I've tracked is how the price action developed. So we see that there are a lot of untapped lows that have developed on the low time frames, and there are a lot of liquidity points that have been left behind. And one of my main arguments, since the market structure has finally shifted as we formed the first higher high in over 4 months, so until now Bitcoin has failed to do so, as we see right here, this marks a structural shift. And because of that, I think that now we will confirm the market structure shift by forming a higher low on the low time frames if we see a pullback right now, or if we go higher. And I think that eventually we will confirm this market structure shift by forming a higher low, then continuing higher. However, I highlighted that there is a possibility that if this price action continues like it has over the last couple of days in this unhealthy manner, without we see a proper flush of the leverage positions and then a bounce to the upside, if we just continue this slow grind up where more and more long positions are getting piled in and we have no proper flush of them, and then we start this consolidation phase that, as I discussed earlier, leads to some of the bearish confluences such as the Bitcoin dominance starting to go down, altcoins start to outperform once again, and euphoria taking over the markets, that I think is a clear indication that this complacency phase could be in play and that the cycle top is in at these levels. So if we do see that, I will start taking a more cautious stance on the midterm, and I'll start building a cash position at these levels to prepare myself for a potential continuation of the downtrend. With that said, this is pretty much the bearish scenario that could take place moving on from here. And as I said, I think it's unlikely that it will happen. So now let's cover what my actual base case currently is and how I expect the markets moving forward. So scaling back a bit, I want us to have a look at the midterm price action since August. So in the bearish case I highlighted earlier, there was this Elliott wave count that implied that we had this first initial wave 1, wave 2, wave 3, wave 4 here at the bottom in August. And the bearish guys think, okay, the top for this wave 5 is in. But my actual base case says that we still have some room to go with this impulsive wave 5. How this would look like is that we had the first impulsive wave 1 in August, then we had this corrective wave 2, this wave 3, wave 4, and that we're now entering our final impulsive wave 5, 2 new all-time highs that will form the actual cycle top. And my actual range for this is around $140,000 and $160,000 mark. I think that in this range is likely that we'll have our cycle top forming, and that here it will mark the last distribution phase of this bull market, where we'll finally see the long-awaited alt season, the distribution towards risk assets, and that marks the euphoria phase and the top formation for Bitcoin. And that, I think, will precede the actual bear market. So this is my current base case. I think that from an Elliott wave perspective, we have entered our final impulsive wave 5. So I think that on the low time frames, it will be worth paying attention to how we will develop inside of this major wave 5. So as I highlighted earlier, there was this first impulsive wave 1, wave 2, wave 3, corrective wave 4, and now we're in our final impulsive wave 5. So I think that on the low time frames, it will be worth watching these small waves. So we'll have the first impulsive wave 1, wave 2, impulsive wave 3, wave 4, and wave 5. And I think that trading based on these counts will be really helpful moving forward, as I think it could help us to position ourselves or to take a more cautious stance, especially when we approach the final impulsive waves, such as wave 3 and wave 5. So that's my current stance right now. This is my actual base case that implies we're in this final wave 5. And I think it's pretty reasonable to expect some more upside before we top out, and not having this complacency zone forming so soon that would precede this bear market. So this is, I think, a more reasonable approach moving forward. Now there is another scenario that could take place moving on from here, which is the bullish scenario, which personally I find unlikely to happen as well. So there is the bearish case, the base case, and the bullish scenario, that both extremes I think are unlikely to occur, though there are a possibility if there are certain confluences that will develop along the way. So let me show you how that bullish case would actually look like. So looking at the high time frames, we see that back in 2018, from an Elliott wave standpoint, it seems like we had this first initial wave 1, then a corrective wave 2 in the pandemic, which was followed by this major impulsive wave 3 in 2021, which topped out here. This was the technical bottom, which followed this bear market as a corrective wave 4. And this whole bullish scenario is based on the idea of an extended wave 5. So what that would mean is that we're currently in this extended wave 5, both from a time-based perspective as well as from a price-based perspective, meaning that we should end this cycle somewhere in the vicinity of $250,000 to $300,000. So that is how the bullish case would look like, and it is based on the idea of an extended wave 5. That an extended wave 5 represents a wave that is longer than the other two impulsive waves, so wave 1 as well as wave 3. So what that would mean in practical terms is that this wave 3 should have normally been longest impulsive wave, so this was a 1500% impulse up, and an extended wave 5 would be that this wave is larger than 1500% impulse up. So as I mentioned earlier, reaching around $300,000. So this is how an extended wave 5 will look like, and this is the bullish scenario that could take place moving on from here. And I'll make a video specifically onto this blow off top and extended wave 5 idea and what implications it may have for the markets moving forward. So make sure you stay tuned for that. But this whole concept is based on the idea of an extended wave 5. So an impulsive wave 5 that is larger than the impulsive wave 3. Now, this would both apply to the high time frames as well as for the midterm price action. So as I highlighted earlier, there is this Elliott wave count that started in 2022. So there was this first impulsive wave 1, followed by this corrective wave 2, wave 3, wave 4. The bearish scenario implies that the wave 5 has topped out here. My base case implies that we still have another leg higher in the coming months to around $140,000, $160,000. But this bullish scenario and extended wave 5 idea implies that we have room to go up to here. And the impulses that would form this major wave 5 would be something similar to this. So this was actually a first impulsive wave 1, this was a corrective wave 2, and now we're entering the strongest impulsive wave 3, wave 4, and wave 5. So this is how it would look like both on a high time frame basis, as we see here on the very long term, essentially the 7-year Elliott wave count, followed by this 3-year Elliott wave count and this bull market impulse up, alongside with the low time frame price action and this impulsive wave 5 that started back in August. So this is how an extended wave 5 moving on from here would look like. And as I mentioned earlier, I think it would reach up to $300,000. So around this range, that is where it will lead us. However, I think it's unlikely that we'll see this scenario playing out due to the fact that this Bitcoin's market cap would reach around $6 trillion. And because of that, I think it's safe to say that until we have additional bullish confluences that will develop moving on from here, that this scenario has a lower likelihood to play out than my base case that implies we still have another leg higher, and then we start off the distribution phase followed by the actual bear market. So this is pretty much what I'm seeing with the cycle top potentials moving on from here, and this is purely from a technical side. In some of my upcoming videos, I also highlight the fundamentals that could lead up to each and one of these scenarios to take place, so make sure you stay tuned for those as well. As always, if you're enjoying the content, don't forget to give this video a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.